Okay, let's start for today's tutorial 10. We'll go some of the questions that we'll try to solve, and the chapter is, I told you in the last class, not that easy, but it's not that difficult. It needs practice and it needs technique as well. Okay, if you're missing the techniques, you'll miss lots of information. So the question usually I saw from the previous questions, it can be either direct method or indirect method as well. Both methods have appeared in the exam. So you need to be familiar with both methods. So I'll try to solve some of the questions that relates both methods and also a bit of conceptual understanding. And finally, we'll try to solve some of the two questions basically similar to these questions came in the exam before. So I just took it from the book. Very quickly, if we can all write and if you can classify all these transactions that belongs to operating activities, investing activities and financing activities, and if it is not related to any of these, then we put it non-cash financing or non-cash transaction. Okay, just to clear our concept, the accounts or the transaction that belongs to three of these group, right? Do you remember what are the three classification, the three parts in the cash flow? First is operating, second is investing, and third is financing. In operating, our focus will be what? Income statement and current asset, current liabilities. This section will be our focus. In investing, what is investing? We have to look at non-current asset, and for financing we will be looking at non-current liabilities plus share capital categories. Let's start with the transaction, and then if it is operating, give O, and if it is investing, give I, and if it is financing, give F. Okay. If it is non-cash financing and investing, NFI, transaction that is not reported on the cash flow statement, N. For each cash flow, indicate whether the items is increasing, plus, or if it is decreasing, give a minus. Quick. Right, quick. Write A, B, C, D, and then write the answer O, I, whatever. For example, collection of accounts receivable is going to be what? Not account receivable. It's going to be operating. So just give like this. Issue of bill payable to borrow cash. Okay. Depreciation, issue of preference share for cash, payment of cash dividend, sale of land, acquisition of equipment by issue of bill payable, payment of bill payable, going good. Why we have very few students today? Any deadline that you have? Some other assignments? Law? Okay, they're doing law assignment. Eh? Okay, we need to go quick. Issue of bill payable to borrow cash. Issue of bill payable to borrow cash, but what it is coming? Bill payable can be short term, can be long term, can be for many things. But see the purpose. Cash is coming. Okay, what is the purpose? It is actually liability. So if it is non-current liability, is going to be financing, right? We will come with that. Issue of bill payable to borrow cash, that is going to be what? Financing. Depreciation. Depreciation is a non-cash transaction, right? Issue of preference share for cash. Everyone should do this one. Financing. Very good. Payment of cash dividend. Also financing, which is related with share. Sale of land. Sale of land is investing because asset is decreasing. So just write investing. Acquisition of equipment by issue of bill payable. What do you think? Acquisition of equipment by issue of bill payable. Is there any cash involved? If you just give a transaction journal entry, what is the journal entry? Equipment debit, bill payable, credit. So that's not going to be our any cash transaction. So it's going to be NFI. It's non-cash but financing and investing, right? NFI. Yes. Payment of bill payable. So this one, for example, I'm paying. So it's going to be financing. Payment of long-term debt. Payment of long-term debt is going to be financing, right? Issue of ordinary shares for cash. Financing. Very good. Payments of account payable is going to be operating. Acquisition of building by issue of ordinary shares is going to be NFI. Purchase of equipment is going to be investing activities. Very good. Payment of wages to employees is going to be operating. Collection of cash interest also operating. Sale of building is investing. Okay. Okay, so this just for our understanding. Now, slowly let's move on this operating activities. Prepare the operating activity section of the business cash flow statement for the year. So it's all given here. No need for calculation. Again, is to be able to identify the transaction and then put it in the operating cash flow segment. So can you try? Let's do this one. First of all, if you are taking the strategy is to identify the transaction and then give the classification, okay? Because I'm looking for only operating section, so just write if it is operating or not. If it is operating, give O and or other things, okay? That will help you. And then if you think that this is going to be cash inflow, give a plus sign and then move next, okay? So that will be your first strategy. Look at the transaction, identify and then give plus or minus. Go, right. I need to find the answer. Payment to suppliers, purchase of equipment, payment to employees, payment of bill payable, payment of dividends, cash receipt from issue of shares from customer and cash receipt from sale of land. Done? Have you got? No? So you see, we are looking for cash flow from operating activities, right? So cash flow from operating activities, you have to have in your mind, yes.
I understand that, but I don't know how to separate operating from financing and all that.
Yeah, that's what we did in the last example, right? We separated the classification. No, not last class, in just few minutes ago. Oh, you just came? Okay, what we said, okay, just repeating. Transaction that belongs to income statement, current asset and current liabilities will be reported in operating activities. Transaction that is related with non-current asset will be reported in investing activities. Transaction that belongs to non-current liabilities and share issue will be reported in financing activities. Okay, the others too, I'll write it here. Okay, so this one plus this one will be operating. This one non-current asset is going to be investing. Okay, and this one is going to be financing. So bills payable. Okay, whenever we pay a bill or loan or any way, current liability in what I mean is always like wages payable, accounts payable, salaries payable, those types of liabilities. Okay, if you have a notes payable or something, it's actually financing, right? So whenever we say bill payable, it's going to be financing. Okay, we assume that it's going to be a long term. And for example, current portion of long term debt, that is also going to be a financing because it's a part of financing. We just moved it to for this year, right? Basically, that was a part of financing. So similarly, this one, notes payable as well, or any other bill payable. So net cash flow provided by the operating activities. Anyone? Anyone? 1,000, 2,000? Yes. On the back, cash flow from operating activities. Have you been able to complete? No? Okay. So cash flow from operating activities. Okay, let's start with this strategy. Payment to suppliers. Look, listen here. Payment to suppliers, it is related with operating, right? And it is positive or negative? Okay, operating. Purchase of equipment is investing, right? Is cash outflow. Payment to employees is operating and also negative. Payment of bill payable is financing. Payment of dividends also financing. Cash receipt from issue of shares is financing and is plus. Collection from customers, operating activities, so it's going to be plus. Cash receipt from sale of land is going to be investing, so it is also plus. So now I see, let's start with the first one. Always I'll be looking collection from customers, the first item. Collection from customer is $190,000, and then anything else? No, right? So payments is to suppliers. Suppliers is $117,000. What else? Employees, how much? $72,000. So if I deduct this one, it's going to be only $1,000. So the first way, the important step is to identify the collection from customer. Okay. In this calculation, it is given collection of customers, payment to suppliers. But in the next calculation, we will see here. Okay. Yeah. Listen here. If you listen here, that will be beneficial. Discussion after the class. Okay. So collection from customer is always going to be in the direct method. In the direct method, this is going to be my first item, collection from customer. The second item must be payment to the suppliers. Okay. And then we'll look if they give you if it is not like this format, maybe we'll go to the next example. If it is income statement format, then we already deal collection from customers is basically sales that we deal, right? And then to suppliers is the one cost for inventory. That's one we already covered. Then you go to the income statement, look at the expenses they reported, rent, any other expenses, their supplies expense, salary expense, go all the items and see what is the reported amount. So that is going to be our base for direct method. Is that okay? This is direct method. Yeah, we did only one part. Can you move next? Okay, from this, now in the last calculation, the collection from customer was given, right? Payment to suppliers was also given. But from this, we need to calculate the collection from customers. Sometimes, not sometimes actually, most of the time it will not be given. We have to calculate. So collection from customers during 2016 and payments for inventory during 2016, we have to calculate from here. Any idea? From the last class I showed you from the accounts receivable section that how to calculate.
Opening balances.
The collection from customer is related with which account here? It's accounts receivable. Okay. Accounts receivable. Payments for inventory is related to it. I told two accounts. One is accounts payable. This is one. Second is inventory. Okay. But first we try to calculate customers. This one, first one. Okay. Simple. Do the T account. Do the T account for accounts receivable. Then you will be able to calculate this one. Or simply you can use the formula. But I prefer using T account. You don't have to remember it. Second will come. Use the first one.
The first one, second one. You were saying something.
Collection from customers. This one.
You were saying inventory something.
No. Second one is related with inventory. Second one. Okay. T account is the best way to calculate all the amounts. Okay. Any calculation, any payments, or any inflow, outflow that you are looking for, T account would be the best solution for you. Okay. So do the T account for accounts receivable. Very simple. Do the T accounts. Yeah. T account means ledger account. Do a T accounts for account receivable. It is given sales is $143,000. Okay, I give you one more clue. Okay, first do the journal entry for this one. Sales $143,000. Sale is $143,000. What is the journal entry? Accounts receivable debit to sales revenue credit, right? Okay. Now that put it in the T account of accounts receivable and then see. Not getting?
Receive cash for that. Collection from customer.
Right. Collection from customers during is we need to calculate, but sales amount is given. They didn't give the collection from customers. This is one small formula that we taught in the last class.
10,000, yes, sir.
Collection is
We
collection.
already received 10,000.
Eh?
We received 10,000.
We received 10,000.
Or
No.
Which sales? We made
No. Okay, account receivable. We look at here, okay? Listen here. Important, okay? if the business, we just started a business, no, you have to listen, and other people also want to listen, right? If the account receivable, this is our first year of the business, for example, we started a business this year, and account receivable in the beginning is, for example, 0. So beginning account receivable is 0, okay? And we had a total sales $143,000. Is that okay? $143,000. Account receivable, you see, okay, I go for account receivable. Ending balance is also showing $143,000. Do you get my point? Account receivable in the beginning of the year, because it's my new business, is 0. And at the end of the year, account receivable, I see this is $143,000. But when I see my sale, that also telling me that $143,000 is my total sales. How much cash I received from these sales? Is 0, right? Because what? Sales minus increase in accounts receivable, that is $143,000. So minus. So my sale is actually $143,000, and increase in account receivable in the year, beginning of the year was 0, at the end of the year is 143,000, means it increased by 143,000. Is that correct? So sales minus this one, so cash receipt from customer basically 0. Any problem in understanding this point?
Yes.
Any repeat? Do you need?
Can you repeat again, please?
Okay, we go again. We started the business. This is the first year of the business operation, right?
Yes.
So in the whole year, so in the beginning of the year, that means we should not have any account receivable. It must be 0. Is that correct?
Yes.
Because just new business started. In the whole year, the sale is $143,000. That's what we know, but we don't know how much cash that I received. That is our purpose to calculate, right? But I can see the account receivable, the outstanding balance at the end of the year is showing $143,000. Yeah, just this one. So account receivable is showing $143,000. My whole sale for the year was $143,000. What does it mean? I didn't receive any cash amount during the year. Is that correct?
Yes.
Because every time I'm giving sales, for example, sales must be credit, account receivable, debit if it is on credit, right? So total amount of on credit is showing $143,000, and my sale amount is also showing $143,000. That means customer did not pay anything this year cash. Now I change this one. The account receivable balance at the end of the year is showing $43,000. How much cash we received this year?
1,00,000.
It's simple, $100,000, right? Because my sale in the whole year is $143,000. Account receivable is showing $43,000. That means I received $100,000. Is that clear?
Yes.
Any problem in understanding this one? No. Now the problem is when I have the beginning balance. So basically, if you can put it in the formula, it is simple. What I am doing, sale minus increase in account receivable. So account receivable increased from 0 to $43,000. So what I am doing this, 143,000 minus 43,000, collection from customer is going to be $100,000. So we need to get this amount. If they don't give us this amount in the beginning of the balance, then I will not be able to calculate this one, because I need to calculate increase or decreased. Is that okay? So they will always give 2 years balance, the beginning balance and the ending balance, because if you don't have the beginning balance, you will not be able to see how much account receivable increased in that year, and we can't adjust with the sale as well. So now, can you give me the account collection from customers during 2016? This is your beginning account receivable and this is your ending account receivable. 1 minute.
143 minus 59, 140 minus 40.
So 49 minus $59,000, that means it increased by $10,000. So what is this? Our formula is saying sales minus, if it is account receivable have increased, we have to deduct, right? So 143,000 minus $10,000, that is going to be 133,000, right? Any question with this? Okay, how do we do T account in this? Very good question. Any problem with this one, formula one? I mean, to get the formula so you can easily, we can do it. But if you do the T account, okay. For example, this is my account receivable account, okay? The beginning balance is how much? Is going to be $49,000, okay? And the ending balance is showing $59,000. Is that okay? And the sales during the year is $143,000. Now the collection from customer is coming actually here. This one plus this one minus this one, because that is your ending balance. Okay, T account. So whatever the account that I am doing, it must have always two balance, right? One is beginning balance, another one is ending balance. It's from now on, you will see there is a two balance. So the first balance, beginning balance, is here, and we know that this is the ending balance, right? Ending balance always be in this side. Is that okay? Now, related to that account, that is sales. Why I am writing sales in the debit side of account receivable? Anyone? Because when if I do the journal entry, what it becomes? Account receivable debit, sales revenue credit, right? So sales revenue credit, so that's why account receivable is a debit account. So I'm giving him this amount. So now add this 143 plus 49. What is the amount? 143 plus 49. 192. Okay, minus this 159. 100. Okay. So this is going to be the format. I mean, we'll do more calculation on this. It will be clear. Okay. But for the time being, I want you to understand this process. How it is coming. So it goes same with salaries expense. Okay. In income statement, you see salary expense is reported. Listen here. In income statement, your salary is reported $1,000 expense. Is that okay?
Okay, got it.
We go here. Okay. Need to listen this. Salaries expense in income statement is reported $1,000. Okay. And let's say again, this is the first year of the business. Salaries payable in the balance sheet has zero balance. For example, there is no salaries payable reported in the balance sheet. How much salary we paid cash in this year?
0. 0.
We paid cash in how much?
Nothing. We didn't pay anything.
Salaries payable has zero balance, for example. That means whatever the amount reported in income statement must be cash, because if there is anything amount that we did not pay as a salary, it must be going to the balance sheet as a payable. Is that correct? So whenever I am trying to see payment to salaries expense, I need to look at the balance sheet. Is there any payable remaining? So any income or any expense that I am taking from income statement, I always need to come back here and see whether that account has any payable or anything advanced or anything here. If it doesn't have anything here, no relation, that means I'm assuming the reported expense in income statement has been paid by cash. Okay. Now let's go this one, payments for inventory during 2016. Cost of sales is given $80,000. Any idea? From cost of sales, how can we calculate
activity is cost of sales. We need to find out purchase.
You need to find out purchase, right? We first need to calculate the purchase. Because if I don't know how much is the purchase, I can't put that balance in the accounts payable. Okay? My payments for inventory is related with accounts payable, right? But if you do the accounts payable, you will not find how much the purchase was in that year during that particular year. From the accounts payable, you can't say exactly how much was the purchase there. So I need to calculate the amount of purchase as well. One simple answer is, if they just give you the purchase was during that one, cost of sales, usually given cost of sales. Why? Cost of sales, does it mean the amount that you bought during that year? Yes and no.
Yeah.
Cost of sales, is this the total amount that you bought inventory during that year? Yes or no?
No. Cost of
What is that?
the actual sales cost.
The goods that we sold during that year, the amount of cost. It does not say how much I purchased. It says that how much I sold and what is the costing price of that one, right? So if you can calculate how much purchase I did during that year, that will help me to put it in the accounts payable. Is that okay? Okay, now our job is to calculate the purchase. What is the formula to calculate purchase? Anyone? Opening inventory, is it? What is that? Opening
Opening plus purchase minus closing is equal to cost of sales.
opening plus opening minus or opening plus? Opening minus? Opening minus, yes, opening minus cost of sales plus minus closing equal to what? Purchase?
Opening plus cost of sales, not minus.
Op-
Opening plus cost of sales minus closing is equal to purchase. Opening plus 84,000.
I don't, do you have the book? I'm not, I think no, not this one.
Opening plus closing minus closing.
Opening plus cost of sales minus closing inventory is going to be cost of sales, is going to be purchase. So basically it's supposed to be opening plus purchase equal to
Opening plus purchase
minus cost of sales supposed to be closing inventory,
Opening plus
right? So now closing
purchase
plus cost minus opening should be the purchase. Yeah.
minus purchase.
Whatever you had opening, right? Look at here. I'm just thinking whatever I had in the opening, and then whatever you purchase, and then the amount that you sold must be the closing inventory. So if I transfer now, I'm looking for purchase. So basically closing, I'm transferring cost. Closing plus cost minus the opening should be the purchase. Is that correct? What do you think? Look at the book. No one has the book. Yeah, that's what I said. Closing inventory plus cost of sales minus beginning inventory should be the purchase. So let's do this one, okay?
Oh, we are finding purchase.
Yeah, we have to find the purchase, right? Closing plus cost minus opening is going to be your purchase. It's simple, right? Whatever the amount that you had and then whatever the amount you bought, okay? And then whatever the amount you sold is going to be ending inventory. So just put the other way around.
Opening
74,000.
किंतु
So we got inventory how much? 70?
80,000. The cost of sales is 80,000.
What is the amount? Inventory, sorry, purchase. Purchase is closing inventory. What is that closing inventory? Closing inventory is 78,000 plus 80,000 minus beginning inventory. 78 plus 80 minus 84.
Opening inventory.
What is the balance?
78.
74,000. 74, right?
74. Opening inventory.
Okay, $74,000. Now I need to do the T accounts for accounts payable. Okay. So we do the T accounts for accounts payable. Simple. What is the beginning balance of accounts payable? It is going to be 38,000, right? Debit or credit?
Accounts payable is
Credit. So we have to remember this one. Credit. $38,000. What is the ending balance for accounts payable? That is $43,000. How much is the purchase that we calculated? It's going to be $74,000. So I need payment to supplier is here. 69,000. Excellent. $69,000. Okay. To calculate payment for suppliers, I need to know how much purchase I did during that year. Okay, that's my first step. But I don't know how much purchase that I did in that year. So I go back with the formula: purchase equal to ending inventory plus cost of sales minus beginning inventory. That is the amount of purchase that I did. Right. So I come to know that it is $74,000 product that I bought in that year. If I go, sorry, this one 86. 74. Look at this one. Add that one, ending inventory plus cost of sales minus beginning inventory is going to be 74. Probably you are, I think, reversing the ending, and 2015 is going to be the beginning inventory. 2016 is going to be the ending inventory. Is that correct? I think that is the mistake. Okay. Now, if I do a T account on accounts payable, what does it gives? Accounts payable beginning balance was $38,000, and ending balance is $43,000. And during that year, I bought the purchase is $74,000. So the purchase inventory was debit, accounts payable was credit. So that's why I put $74,000 here. Now, if I add these two, and if I see how much is still remaining, that means this is the amount that I actually paid during the year. Accounts payable means what? I have to pay, right? In the beginning of the year, I had to pay them $38,000, and during the whole year, I bought $74,000 product. What is the total amount here? Can anyone give? No, this one. 8 for 2, 412,000. So during the whole year, I'm supposed to pay them $112,000, but still the balance is showing $43,000, means I actually paid them $69,000. So this is the payment to suppliers. Is that okay? This 38 or 43? Okay, why it is not in debit side? Good question. Accounts payable has normally credit balance, right? So the beginning balance is always a credit balance. If the beginning balance of any account is credit balance, his ending balance I will be reporting always on the other side. Similar to the accounts receivable that I did, beginning balance we reported in the debit side, but the ending balance I reported in the credit side. Is that what does? Why is that case? Okay, good question. Okay, I remove this. Now that is very good. You need to be very clear in concept. If you make mistake in concept, you will not be able to progress there. Here 38,000 is your beginning balance. Okay, 74,000. If you give a journal entry for $74,000, what is the journal entry for purchase? Purchase, for example, inventory debit, accounts payable. Accounts payable what? Credit, right? So I give an accounts payable credit $74,000. During the year, for example, it is given already. Okay, I know how much cash I paid during the year. So if you pay accounts payable $69,000, what is your journal entry? Accounts payable debit to cash credit, right? So I put accounts payable debit here $69,000. So I already had a credit balance of 112, right? And then I have a debit balance of 69,000. That means this side is short by how much? $43,000. If I don't write this is the short, then I can't match 112. But at the end, this will be transferred in this side, 43,000 in the next month. You got it now? Similarly, accounts receivable, whatever the short balance, it will be transferred to the next month as a positive balance. This is just to match the total amount 112. Basically, this is a credit balance. Is that okay? Yeah, because they already give us this amount, ending inventory, right? So that's why we are able to calculate that this is the payment. Accounts payable, yes, accounts payable. Any question with this? I know that it is really difficult. In my experience, students find, even not this class, every class that I find, I teach this cash flow, have lots of difficulties in understanding the concept and whole. And that's why this is the last chapter. Okay, very good question. Let's write this one. What is the formula? If we can remember or if you can memorize this, that is also good. No, we adjust with the cost, right? Cost of sales minus decrease in inventory and minus increase in accounts payable. Can you try this with this? Can you try with this formula to get the amount? Cost of sales minus decrease in inventory. See the inventory amount, how much it decreased by 84 to 78, whatever the amount, write that one. And increase in accounts payable. Accounts payable increased by $5,000. Let's do this one and see the balance.
This formula is for
It's also for same
purchase.
payment to suppliers. Payment to suppliers. How much? Anyone tried with this formula? Can you try? Cost of sales minus decrease in inventory minus increase in accounts payable.
74,000.
74? No.
This was it. I don't know.
Anyone? What is the amount?
69,000.
69,000.
So you get the amount?
We still need to find out by the calculation. Anyone did? 69,000. Good. So even in the exam, you can use the formula as well. If you can remember, decrease in inventory. If inventory is decreasing, I will be deducting from cost of sales. If accounts payable is also increasing, I will be deducting from my cost of sales.
So if accounts payable is decreasing, then
Accounts payable is decreasing, then we have to add. Okay, we have to add.
it's better to use T-bar.
Any question with these two? I'll be testing you in the next question anyway. Can we move next? Okay, a quick calculation. This one, 2 minutes. 2 minutes. Just write the amount. No need to write all the description. But I want you to calculate operating activities cash flow. Operating activities cash flow by using, look at this information and then straight we go, okay? It will take 2 minutes, only 2 minutes.
Only 2 minutes. 2 minutes lazy.
Maggi noodles में देखा कर
5 minutes है 1 minute 2 minutes Maggi the accounting record what to do son
You do your one, don't laugh a lot. Don't worry for others, yes. Payment for interest is operating. Is a controversial one. This one and dividend one is always a problematic one. So it's operating. For this class, dividend if I am receiving, okay, then it should come in operating. If I am paying, it should be going to the finance.
For interest, both are okay.
Yeah, both are okay. I'm for interest, yeah, put it in the operating only for the time being, yes.
This is actually purchase, right?
Yeah.
Why is this purchase? It's supposed to be purchase to this.
Purchase
Debit to-
accounts payable credit, right?
Yeah.
So that's why I'm doing an accounts payable credit. So that's why I put 74,000 credit. If I'm doing an inventory account,
This 74,000 is purchase.
purchase, right? If I do, purchase means inventory basically.
Yeah.
So if I do a T account for inventory,
Yeah.
I would report 74,000 in the debit side.
Okay.
But if I'm doing now T account for accounts payable,
Yeah.
journal entry is saying inventory debit, accounts payable is credit.
Yes.
So that's why I'm putting 74,000 in the credit side.
Oh, okay. So whatever the purchase, we have to pay this. So this
So-
is account payable basically.
Yeah, this is
Okay.
accounts payable because I'm assuming that the whole purchase I did it on accounts payable.
Yeah.
Okay, I didn't pay anything.
Okay.
So, but I need to test it whether I really paid anything or not. Beginning, I had that balance,
Yeah.
and I also supposed to pay this amount.
Yes.
In total, this year I'm supposed to pay them 112,000.
Yeah.
But actually, my ending balance is showing 43,000. That means I paid something to them,
Yes.
right? So this one minus this one, that's showing that this is the amount that I actually paid during that year.
And the logic is account payable is basically credit. So
Yes.
beginning balance goes to credit
Side,
and
yes.
Ending if it's on the credit side beginning, then ending balance.
Ending,
supposed
I
to
will
go
always
ending.
write here so that I can get that balance.
So it's just the reverse.
Yeah, the reverse
And
thing.
why this opening balance is on credit side?
Because accounts payable has always a credit balance, right? If you do a T account, accounts payable has always a credit balance, never has a debit balance. So this is the liability for us, right?
What would be the journal entry for account payable? It's account payable to
Is whenever the account receivable is coming, how? Purchase debit, accounts payable credit. Every time you
okay.
do any purchase on credit, so purchase is going to be debit, accounts payable is going to be credit.
okay.
So this 38,000 is last year's money that I didn't give, right?
So it has always something to do with purchase.
Yeah, always to do with the purchase. Done? Income tax is operating. Income tax, why you think it should be financed? It decreases? Equity? No. I mean, income tax is not directly related with anything of our finance. It's not an expense. It's an expense. Dividend? No. Dividend is linked with my share. No, income tax is related with your operating. Its income is coming how? By your operating, right? So there is a difference. That's why we are doing this class. Yes. How far you did?
Kabir, I get really confused about this T account. So instead of making T account,
T account.
can we
Use the formula. Yeah. Why not? If you get the same formula, same result exactly.
like
I mean, if you use T account, you get the same result. If you use the formula, you get the same result.
like I always get so confused whether to write end
Okay.
of the beginning and all these things, you know. So
But still you find the same result. I feel comfortable to get the good result is using the T account, and if you just follow the techniques. But there are all formulas are same, giving the same result. It's just converting this T account into a formula. This is the same things.
but in exam,
In
I
exam,
can
of course,
write formula,
anything
right?
that you
I
like.
think very easy to remember
Right.
the formula.
Okay, that's then it's easy for you. Okay, you don't have to worry anything. Just do the formula and then put it in
And
there.
what should we do in this one?
This one we are looking for cash flow. No, there is nothing to find. It's all given. We just put it in the operating activities. okay, and find the balance. Okay. Yes. Income tax is operating activities. What do you think income tax is related with what? Financing, investing, anything? Income tax is related with operating. Yes, operating. Payment of interest is operating. Payment of dividends is what?
Payment of dividend is
Financing. Collection from customers. Depreciation. Profit. Collection of dividend revenue. Okay, now do it. Any question?
yes, question.
Collection of dividend revenue is one of the a bit, well, to some extent controversial. But for this book, they made it easy. The collection of dividend revenue is going to be operating, but payment of dividend revenue is going to be financing. Payment of dividend is going to be what? Financing, and this when you receive something, because that is your investment and that's give you a return. Is that okay? Yeah, dividend related to share, but this is my investment. I invested in a share. The one that we pay, we actually issued the shares. It's related to investing, but it's the operating income. It's coming regularly every year. It's not something that you'll get long-term benefit. That's why we put it in the operating, and we report it in income statement anyway, right? Yes.
Payment of interest one.
Yes.
We generally pay interest for loan.
For loan,
And
but
loan will be long term.
Yeah.
And it will be NCL.
no NCL. Yes,
And
good.
we'll deduct here, and it must be finance. Why it is operation?
Okay, good question.
Yes, sir. What was the question?
Why? No, listen here on the back. If everybody speaks, no one listens, right? But if you have question, raise your hand. Instead of discussing a lot among the friends, it creates the chaos, right? Other students want to concentrate and they cannot. Question from here. Anyone you had a question? Indirect method. We'll have many questions with indirect method coming soon. Okay, anything else? Anything else? Okay, his question is why payment of interest we are reporting in operating instead of reporting in financing, because it is related with finance. Okay, it is long-term debt, and that's why we are paying interest, right? The long-term debt is long-term. We are paying it over the 5 years, 10 years time, right? But because of its cost, interest, we are really giving it regularly every month or every year. So that comes under the operations to run the business, and we report it in also income statement. Is that correct? So that's why payment of interest we will be reporting is in income statement. I mean in under the operating activities. Receiving of dividend is also exactly similar. Instead of taking loan, now we are investing in a share, and that they give periodic revenue. It comes usually in 6 months, every year twice, all the revenues coming. So this is again an operating income for us, and we report in again in income statement. So that's why receipt of dividend, collection of dividend will be recorded under the operating activities, but the payment of dividend, okay, that will be related with our financing. Okay, can you do it now? What is the amount? $11,000. Collection of? Yeah, payment of interest, collection of interest, both will be operating. Both will be operating. Can you go next question, or you want answer? Answer is $11,000 from here.
Yes. Please again.
Okay, I'll skip this question. maybe we'll come again. We had these questions before. Okay, 10 minutes time. Let's do, you need to calculate, this question actually I think appeared 1 or 2 times in the exam as well. So let's do this one. This is a good example and good opportunity to practice all the things that we learned so far. Collection from customers, you need to calculate. Payments for inventory, that's 2 already learned, the others as well, okay? Payment of operating expense should be easy. Acquisition of property and equipment, no sales. Borrowing with, okay, do first 3 and then we'll do the rest, okay? Try first 3. At least you don't leave a blank paper in the exam anyway. Learn 3 at least. And then I will show you that how to calculate the others. It's the same formula that I used, collection from customers. If you can memorize the formula, that is best. Otherwise, you can do the T account, simple. And again, payments for inventory. Start doing this. No discussion. No, not one. Not a single one. At least the first one that we did. সবগুলো সূত্র আছে, বাট সবগুলো সূত্র মুখস্থ করতে গেলে তো অনেক সময় লাগবে। এর চেয়ে বরং টেকনিক হচ্ছে টি অ্যাকাউন্ট। টি অ্যাকাউন্ট করলে কোনো ফর্মুলা মুখস্থ রাখতে হবে না, জাস্ট টেকনিক ফলো করলে হবে। Account, make a T account for account receivable, then you can see what is the collection from customers. T account for against accounts payable. How far you are doing? No? Do the T account. If possible, do the T account. Collection from customers. What is the formula? If it is using formula, use the formula. Let's see. It's going to be
Net sales of 2016 and increase in account receivable, that's 180.
yeah.
This one is this.
It's supposed to be, yes, beginning. Yes, answer is 24938. Yeah.
But I don't know.
Payment
this
for
one.
inventory. So if you can't remember, then
But you,
I did with the T account.
I can.
The book has actually all the formulas. So if you want to memorize, that might
T
be.
account is very weak point of mine. I cannot do.
We could try again. Okay, but I think it's easier.
Our book,
Yeah, all the formulas are there.
one is very difficult. Liability
We will have one here. Payment for operating expenses related with accrued liabilities. We will do it. Any similar questions that you find in the book? No?
I've never ever seen that question. Loss also given, money also given, and next other one, 3 profits were given, and I have to calculate.
Profit? No, maybe. I don't know the questions as well.
So do we need to calculate sales, cost of sales.
And the cost of sales is given, right?
Yeah.
Net sales and then cost of sales is also given. So why do you
Yeah,
need?
it's 2016. They have given both, 2016
Yeah.
and 15. Do we need to
But
deduct?
accounts receivable, when we are looking for collection from customers, then we need only one sales that is latest, and then we need account receivable from both years.
Yeah, deduct. We need to deduct
Yeah.
that one and then
Yes.
deduct from cost of sales.
Yes. Collection from customer 24938. Very good. Let's
For
go
the
for it.
sales collection, you have to take the new one for the recent year.
Of course, sales always will be taking the recent one, 2016.
We always put the
Opening balance here.
balance,
Okay.
because it's on debit
Account
because-
receivable has always debit balance. Very good.
Debit balance.
Yep. And they put the ending balance, and you got a sales. So basically, account receivable debit, sales revenue credit. That's why you put this one in this side. Right? Do the journal entry simple. Sales. I'm taking sales. Where should I put? Debit or credit? Then I say sales. What is the relationship with account receivable? Account receivable is always debit. Sales is always credit. Right? So that's why I put this amount here. Not memorizing, but just understanding the concept. Why I am putting sales in the debit side of account receivable? Because account receivable is always debit, sales is credit. So that's
Sales
why in
credit,
the
yeah.
credit side.
When sales happen, so we put a journal entry like
Account receivable debit, sales credit. Yes.
For the payment for inventory.
Inventory.
Yeah, for
Yeah.
the formula cost of sales when decrease in inventory. Right?
If inventory is decreasing, then we minus. If inventory is increasing, then we add.
Okay, because here it's increase.
And then we have to reverse the sign, right?
When we go the alignment,
Do you need it urgent? Don't worry. It will come on time. Yes.
I've done this much. Yeah.
Accounts payable.
Yeah.
Okay, first of all, before we create the accounts payable, we need to calculate the purchase. Did we calculate the purchase? Very good. This one. So the amount supposed to be 18. Very good. Yep.
589.
Yeah, awesome.
This amount is
Yeah.
for accounts
Is it
payable.
no, this amount is payment to suppliers. This is
okay.
the amount that we paid.
All right. Okay. Yeah. Got it.
Very
Payment
good. Payment to suppliers. Payment to suppliers in one. 18.
It's like increase in inventory.
Then it's going to be plus. Yep. Yeah, this is correct.
18558.
18558. What is the first one? Account receivable. 24938. Good, correct?
correct.
Yeah. Account receivable, yes, 24938.
I know. Now, how to do it?
Inventory, use the formula, this one. If it is decreased, then it is minus. If it is increased, then add. Yeah, if it is increased, then minus. If it is decreased, then add plus.
So, cost of sales, where is cost of sales?
No talking a lot. We discuss, but within a limit.
Cost of sales.
Yes, same. So the first one, collection from customer, has a relationship with sales. So we did that one. The payments for inventory has a relationship with inventory and accounts payable. So I marked that one. Payment for operating expense has a relationship with accrued liabilities. Okay. So if you do a T account for accrued liabilities, you will be able to find how much payment we did for operating expense. Okay. Do a T account for accrued liabilities. Anyone with the first question, collection from customer. How much is the collection from customer? Anyone? No? Use the formula.
Sales minus increase in account receivable.
Sales minus increase in accounts receivable. What is the amount? Okay, I will be using all T account. How many of you are not comfortable with T account? Few. Okay, most actually. And comfortable with T account? Only one. Okay. So for collection from the customers, what T account that we have to do? It's accounts receivable. Okay. Do a T account receivable. First of all, give me the beginning balance. What is the beginning balance for account receivable? 619. So put in the debit balance or credit side. Because account receivable has always a debit balance, so it must be reported in the debit side. Now, what is the amount of cost of sales? Sales 18,088. So what is the journal entry for this? If I just know normal journal entry for sales, $18,000, account receivable debit, sales revenue credit. So I'm just giving account receivable debit is by $18,088. So this is my total balance. Can you give me the answer? 619 plus 18088. What is the balance? 18? No. No one? 18707. Okay. So this is my account receivable debit balance. Now I need to find out this amount, but I have already the credit balance, that is ending accounts receivable is 799. So if I deduct this one from here, then you get this one. What is this amount? It's going to be 18,558. Any problem with this? Do the T account of account receivable. Only three balance that you need. Very simple. Start with the beginning balance. Amount of sales minus ending inventory, whatever this. Sorry, ending account receivable. Then you will find this amount. It's collection from customer.
My answer is different from yours.
No, I have to use the net sales. Why no one is telling me?
I was thinking, why you do this?
2511. That 18 is wrong, sir. Sir, 18 is wrong.
Yeah, I
24938. 24938.
24938. If you use the formula, what is the formula for this? Sales minus increase in accounts receivable. Okay, it's going to be the same. Yeah, that's the formula that I showed, right? Okay, can you go to the next one? Accounts payable. Okay, payment to the suppliers. Yes.
Operating expenses,
Sorry?
so we don't use amount of 2015.
For calculating, I mean, we don't need actually 2015 value of income statement. That's given just randomly, no reason. But we need both value from balance sheet. Is that okay? We need both value from balance sheet, but we need only latest value for income statement. We'll be adjusting this value with others. So in the exam, if they give you both columns, basically this column of income statement previous year is no use. Okay? We'll be taking the 2016 value and our adjustment is going to be here. So we'll be using both sides here. Yeah, because you need beginning balance and ending balance, ending balance always. Okay. Can you go to the next? Payment for the payment for suppliers. The one, if you are using the formula, is listen here. Cost of sales plus minus, it could be plus, what increase in?
It could be plus when it is increase. It could be
Increase in inventory, right? Minus
increase in
decrease in accounts payable, is it?
no. So sir, increase in AP, not decrease. This not the boy. Very naughty.
Is it?
Yes, yes. It's right, sir.
Can you follow this formula? What is the amount?
1,855 and 8. 55 and 8.
This is the formula, but if I try to use T account, I need to calculate first what? Purchase. Anyone? What is the formula for purchase? Purchase formula? Plus cost of sales. Very good. Minus beginning inventory. Can you find what is the purchase? What is the purchase? Ending inventory plus cost of sales minus beginning inventory. Eh? No one calculated this? 18558? No. 18? So this is my purchase, right? 18738. If I do T account for now, accounts payable is going to be simple. Accounts payable, what is the beginning accounts payable balance? 1? 1364. Amount of purchase is 18,738. What is the amount this? 1364 18738. No one? 1? 20,100? Now I need this amount, but I know the ending accounts payable. What is the ending accounts payable is going to be 1544. So I deduct this one minus this one, that should be accounts payable. Very good. 18,558. If you are doing T account, this is the way that you will be doing. Yeah, the next one.
Expenses one.
Which way? T way or formula?
Both.
We'll do the T way. Any problem with these first two? Anyone still has any difficulty in understanding first two?
Better to do this way, isn't it?
No worries.
Actually, formula are allowed to take in an exam. Yeah, it is.
Not sure about the policy here.
Because he said we cannot remember, even he cannot remember all the formula.
Who cannot?
We were given
No. For this one you can't take the formula. For this chapter, no. Okay. For other chapters, maybe ratio analysis, and that's why they don't give any question from maybe ratio analysis because this formula will be given.
ratio analysis for the undergrad.
Huh?
Ratio for the undergrad,
Not for you. Ratio analysis is the heart of accounting. Okay. Accrued expense. Let's go to the payment for operating expense. Okay. What did I say? Remember, payment for operating expense. See this one. Other operating expense, how much is this? $4,411, right? If there is no balance, that means if the balance is 0 here, okay, and if it's the beginning, we are starting the business, we'll be assuming this is the amount that I paid completely in this year, $4,411. But now I do the T account. That will help me to get accrued liabilities. What is the amount? Accrued liabilities, what is the beginning balance? Yes. Related with the accrued liabilities, that's good. How do you know that payment of operating expense is related with accrued liabilities? Any idea? Basically, if you see the payment of operating expense, right, we have other operating expense, right? Other operating expense, we don't have any other name. If they have anything payable, that is the name that they write, accrued liabilities. Accrued liabilities means any expense that you did not pay during that time, so it's as a liabilities, and the name is accrued liabilities. If sometimes in the exam it might be salary, okay, salary is written here instead of other operating expense, right? In that case, you will be looking not accrued liabilities, you will be looking salaries payable. Is that okay? Rent expense is written here, so you want to know how much rent you paid exactly, the amount that you will be looking rent payable. Is that okay? Either rent payable or advance rent paid, something like this. Insurance expense, will be looking for prepaid insurance. Now let's do the T account for accrued liabilities. What is the beginning balance?
853.
Is going to be 853. So accrued liabilities 853 is a debit balance or credit balance? On the back, accrued liabilities 853 is the credit balance or debit balance? Credit. Why? This is a liability. Good. 853, right? So for example, whole year the operating expense is $4,411. What we will be assuming, we didn't pay anything cash. What is the journal entry for this? Operating expense $4,411 has not been paid. For example, what is the journal entry?
Payable.
Expense debit to accrued payable, or whatever is this, the name. Accrued liabilities is going to be credit, right? Is that okay? Because it's liabilities, so I'm going to keep 4,411 is going to be my balance. The amount of expense. Can you add these two now? The 4,400 is coming from other operating expense here. Okay, so that is related with accrued liabilities. 452. Now simple, 5264 is supposed to be my total accounts payable, assuming that I did not pay any amount, right? But now I see there is an ending balance of accrued liabilities is 941. That means this is the amount that I already paid. So 5264 minus 941. Can you try? 4323.
Operating expenses is related with accrued liability.
That's what we explained. Operating expense have at this moment no other name there, and there is no other name. The only liabilities is related with operating expense is accrued liabilities. If it is a salary is given there, I will be looking at salaries expense. Okay. If it rent expense is given there, I will be looking rent payable. Okay, salaries payable or prepaid rent or anything.
Accrued liability.
Yeah. Any question with this?
Other expenses, accounts payable
Yes. We need to listen. Yes.
Double 411 amount, that is on income statement, it's operating expense.
Expense, yes.
And the reason why we put this on credit side is
Yeah. do the journal entry, expense debit,
Expense to,
payable credit, right? Liabilities credit.
yes.
So I'm doing a T account for liabilities, so that's why it's credit. Is that okay? No?
Same concept.
All has the same concept. Whatever the beginning balance, the new amount of that. We need to listen. If no talking. Yes, I'm coming. We have to listen the questions and answers.
Yes, got it. Thank you.
Any problem with this? Yes.
What was the question, Kavi?
Question is done. Yes.
This is the
This is the closing balance, 941. Yeah. This one minus this one, then you get this one. Formula is in the book. All formulas are given there, and that's why, I mean, I can't remember the formula. So that's the best is T account. No, then my suggestion is that then look at the book, and if you can remember the formula, of course, that is the best and easiest way to go very fast. Okay, but I think my suggestion is I do it by T account. Easy for me because I can plug the information together and then get the result. Right? We can just do this one. This one plus this one is coming this one, and then minus this.
So sometimes we take the value of 2015 and sometimes we take the value of 2000.
We never take value of 2015 from income statement. For income statement, no.
Like, and I'm talking about balance sheet.
Balance sheet,
We always take the value of
both. Beginning balance is 2015. Ending balance is 2016.
now.
Okay. Anyone did D? Number D? Anyone? No? D is property, plant and equipment. Okay, how much we bought new asset during the year? This is the question. How much new asset that we bought during the year? That means we paid it by cash. Okay, let's do it. Just try to understand the concept. We have property, plant and equipment, right? This one. And then it shows that this amount. What do you think? Property, plant and equipment increased or decreased? From here to here, right? It increased. That means there must be some acquisition here. What is that amount? Difference between these two, right? Supposed to be the easiest one. But there is one element, depreciation. So you need to add the depreciation or you need to adjust the depreciation. So look at the beginning balance. Property, plant and equipment 3,436, right? And minus depreciation supposed to be the balance of this year. But the balance is this one. So now we can find that one. First of all, find the exact amount property and equipment for this year. Officially should be. Okay, forget about this one. This one, right? 3436 minus 273. Do this one. Give me the answer.
Sir, this like this.
What is the amount?
Either this or this.
One of them.
I think this is
No.
3163. That also no.
Do you get the concept? If you don't get, it will make mistake. Operating the asset, whatever asset is given, for example here, asset in 2015 is given $100 and asset 2016 is given $200. I can easily find out this year I bought new $100 asset. Is that okay? But the problem is this year this asset has some depreciation. This value came after deducting all depreciation. So for example, in income statement, I recorded $20 depreciation. So at the end of 2016, what should be my asset amount? $80, right? $100 asset, for example, I didn't buy anything. Okay, let's go zero. $100 is my asset, $20 is my depreciation. At the end of the year balance, it must be only $80, right?
Yes.
Is that correct?
Correct.
But you see the balance is $200. Then what is my assumption? During that year, I bought $120 new asset and that I paid by cash. Any problem with this?
There will be depreciation in the new asset as well.
We don't go up to that calculation, what is that? But that came, for example, we bought it, right? There is a depreciation is there, but we bought this amount of asset, for example, during that year. So that is the cash payment that I did in this 2016. Is that okay? Can you try for this one now? What is the amount?
Sushma, 3462 minus. 3436.
What is the amount?
2015 minus 2016.
2015 minus 2016, yes. It's not enough because I did not consider the depreciation. What is the amount? Anyone? Is going to be
Sir, I already take out that answer, 3163.
3163. Okay, let's do the T account.
Acquisition means, sir, how much we pay?
Acquisition, yes.
So the answer is 3160, sir.
What is the beginning balance? 28 3436. And depreciation is 273, right? And the ending balance is 43. Closing balance. Can you deduct this 243436 minus 273? How much is the amount?
3436 minus
3163, right? And my acquisition, I mean at the ending, the balance is 4346 minus 3163. How much? 1183. So who said that 3100 something? I don't get.
I have done half, but half is left.
Have you got? No? Want to repeat? Anyone in the back? 273. How do you get it? In the credit side? Because if you give a journal entry, what do we write? Depreciations to accumulated depreciation, right? But at the end, I mean the balance we already have, for example, this is after the net accumulated one. Okay, we deducted accumulated already. At the end, that depreciation will be deducted from my asset, right? So I'm deducting that asset, the depreciation. So that is the carrying amount that I should have in that year. But now I have, this is the amount. So this is the increase that I got in the year.
Can we do according to formula?
Do you need to repeat this process? Formula. Repeat. Okay. Okay, one more time. Okay, let's be careful and listen carefully, and then probably if you can note it, that's good. we started with the business, okay? Again, a zero business. That started this year. And we had an asset of $200, okay? And this asset will be going 10 years, no salvage value. What is the amount of depreciation? What is the amount of depreciation? $20. Very good. So, what will be the carrying amount of this asset reported in the balance sheet? 180, right? Carrying amount of this asset is going to be 180. What I did, whatever the amount of asset that I had initially in the beginning of the year, I just deducted that one, the depreciation, and then now I find the carrying amount of that asset. Is that okay?
Yes.
Any problem in understanding this? Just like a high school calculation, okay? Carrying amount. Now, the ending balance of the actual asset in the balance sheet is showing $280. For example, $280. What does it mean? During the year, I definitely bought another $100 asset. Otherwise, it cannot be 280. So this is how I am calculating. I already got my carrying amount and I got my ending balance. I am just deducting this one. My new ending balance minus carrying amount. This is my acquisition. But now let's take, is that okay? $100, okay? But for some reason, okay, here, come here. We have $180 is supposed to be my carrying value, right? And then ending balance is showing only $100. What happened to $80? No depreciation. I already deducted depreciation, and that's how we come with 180. But at ending balance is showing only $100. Then what happened to $80?
Sold.
It was sold. So cash received from selling of asset is $80. That's going there, okay? But in case it increased, that means I paid for this asset. So now, what is the amount from here? Have you got, everyone?
Yes.
Cash payment for asset acquisition is how much? 1183. Very good. Okay. Can we move to the next? We are still already 1 hour and 15 minutes. I still have many questions. No, not a break. Do this one. Borrowing with super paying. Look, this is I'm doing. I could just go give solution and do by 1 question, 2 question, and I could do it. I mean, in maybe 1 hour, right? But I'm still taking lots of time. The reason is that the chapter is difficult, and every semester you have a question from this chapter. So last semester students, I saw their paper. Most of them didn't do any cash flow. No cash flow. Almost no one. Okay. So this we want to make sure that we try our best, even though not 100%, at least 50%, 60%, 70%. If you can solve the questions, that will give you some marks. If you leave the blank, if you don't get anything, you just get 0, right? So why not giving our effort here? Let's do this one. Borrowing with super paying no non-current liabilities. Okay. So what we will do, we'll see what is the liabilities here. Long-term liabilities, 479 and 468.
Sir, the short-term liability that
Is going to be how much?
468 minus 479. 11, sir.
So it's going to be
11.
the liabilities. Okay. 215 liabilities is 468 and it increased to 479, and we did not pay any liabilities. That means we borrowed during that year another $11 or 11 million or 11,000. Is that okay? So this is cash inflow or cash outflow?
Paying.
Is going to be cash inflow or cash outflow? You are bringing the liabilities, right? It's going to be cash inflow. Okay, don't make that mistake. Liabilities means cash outflow. No. Okay. It's liabilities most of the time is going to be cash inflow because you are issuing the shares, cash is coming. You are borrowing money, cash is coming. So it's going to be cash inflow. Cash receipt from issue of ordinary shares. Can you try? Cash issue of ordinary shares capital. Okay. Is 11. Cash issue for share capital. How much?
Which number? Cash received from issuing ordinary shares. Cash and cash equivalent. So ordinary share capital.
Ordinary share capital. It's simple. How much it increased?
671 minus 400.
We just minus this one, right?
Yeah.
How much? 228. Let's go to the next one. Retained earnings. The final one. This one not easy. Not just jumping from here to here. It has another element.
So that cash dividend only comes retained earning.
We need to calculate payments for cash dividend, right? Cash dividend is related with which account? It's related with retained earnings. Okay. So retained earnings, let's look at the retained earnings. Beginning balance of the retained earnings is 3,779. Usually what we add with the retained earnings? Profit. What is the profit? 1810, right?
Yes, sir.
What is the amount? Is going to be 5,014. But my ending balance is showing 5,014 as well. So did we pay any cash dividend?
No.
Answer is no. So cash dividend. $3,779 5014. Did you try 3779 plus 1810? What is the amount?
Cash dividend is 9.
Hey, why we got this one? I don't understand. 3779 plus 1810. What is the amount?
5589. 5589.
Right? 5589. So we had dividend. So ending retained earnings. What is the amount? 5014. So what is the amount that we paid as a dividend? Is that okay on the back? Initially I had the retained earnings this amount, and then I of course have to add the profit 1810. So my closing retained earnings should be 5589, but it doesn't show 5589. It's showing 5014. That means this is the amount 575 we paid as a cash dividend.
575 is the answer, sir.
Yes.
Sir, if lost, that will be minus, right? Loss.
If it is loss, of course it's going to be minus. Now go. Yes. Number? E, yes, we did this. E, long-term liabilities, 468. It just increased by $11. It has no other adjustment. It doesn't say we paid anything. So it's just simply this one to this one. So this is the $11 that cash inflow. Okay. F is cash receipt from issue of ordinary shares. So ordinary shares I had initially 443, so it increased to 671. That means during the amount, this is the amount that I issued new shares. Just simply this one minus this one, or this one minus this one. Okay. I still have some more questions from cash flow. So what do you think? Give a break and then we come back with the questions again. Cash flow? Okay. Okay, we take a break for cash flow. I will be back with again cash flow. Okay.
के भन न कस्तो के गरे यदि अस्ति पनि हाम्रो त्यतिखेर पनि कसरी
Yes.
One simple thing. So this one is suppose opening balance
Yep.
16.
Yes.
This balance is for 15.
Yeah.
This is depreciation for 16. This is for 15. So what we
Okay.
did was
Yeah.
we had this already. We had this equipment.
Mm-hmm.
Then it is saying that we purchased something, but depreciation is there.
Mm.
Why are we adding 2016's depreciation instead of 2018, the 15's depreciation?
Okay. After deducting 2015's depreciation, this is the ending balance of 2015. So this balance already deducted this one, right? So that is going to be my 2016's beginning asset. So
This is 20,
so this is 2016. So his depreciation came basically from him, not from the previous year, not from this one.
so we
Okay,
have
this is
to-
the ending balance
so we have to deduct the depreciation.
from 2015 ending one.
Then the difference is
The difference is going to be my
Suppose
acquisition.
for example, if 2017 depreciation is there, then we deduct this.
Yeah, from 2016 depreciation. Yeah, because 2016 asset is going to be used during 2017, right?
So for retained earnings, also same thing.
Yeah, retained earnings is also going to be same.
The profit is this retained earnings. Previous
Is
retained
previous
earnings,
retained earnings
current
plus
year's
profit, yeah.
minus the
Yeah,
payment
whatever
made
the
is,
yeah, then we get the balance.
Any students around here? কেউ আছে নাকি আশেপাশে? Anyone around in the corridor?
Best part is like
Students who wanted to learn indirect method, I think left.
They are on their way.
On the from home. Okay, let's do this one. So this is with you. I think the question number is 1614. Okay, the question is with indirect method. The other page, question number is 1614. Got it, everyone? Is 1614. Okay, this is to do with the indirect method. So usually in the indirect method, of course, you will be given a income statement and also probably a part of balance sheet. Okay, what is the difference between direct method and indirect method?
Direct method.
The direct method and indirect methods, mainly the difference comes in only in the section of operating activities, right? Financing and investing will be the same in both both methods. Okay, so you try with this in invest. Okay, operating. So this one we will start always with net profit. Our adjusting or the calculation will always start with net profit. Okay, that is our first job, is to identify the net profit. Okay. Did you find net profit? What is the net profit? $51,000. So our calculation will always start with net profit, and then so start with the net profit. Then we will try to find any non-cash item in our income statement. Okay, the second step is to identify any non-cash item. Okay, non-cash item. Any non-cash item, that is our second step. If I can identify any non-cash item, that is usually it comes with a depreciation most of the time. Second, it might be gain on sale of equipment or loss on sale of equipment, something like this, gain or loss. If there is any items reported gain or loss, will be adjusting with net profit. Most of the time it is not there, but sometimes it could be there. Gain or loss, because it is not a cash item, it comes as a gain, so we'll be adjusting that one as well. Okay, if it is loss, we'll be adding back. But anyway, the second step is to identify the non-cash item. Okay, the third step is to go to the balance sheet. Okay, to the balance sheet. Is there anything non-current asset of this amount paid in cash, sale of, okay, we go here. Okay, in the question is given no gain or loss. So that's easy question, easy answer, easy information for us. I don't have to wait for any other information. So there is no gain or loss from the sale of equipment or sale of asset. Okay, cash receipt from ordinary shares, we know. Payments of bill payable, payments of dividend, okay, that's, we don't have to worry. Now the third is to identify the current asset and current liabilities. Okay, we need to find, except cash, we don't worry for the cash, cash is gone. Okay, account receivable, we need to identify whether it's increased or decreased. Okay, identifying increase or decrease of all current asset and current liabilities, that is going to be my third stage. Look at the balance sheet, current asset and current liabilities, and identify whether it increased or decreased. Okay, each amount we'll be looking at carefully. From the last year, no mistake here, 2015 is going to be the beginning one and 2016 is the ending one. Okay, so we always need to find out the amount as well, not only identifying that whether increased or decreased, we need to identify the amount by which it is increased or decreased. Okay, can you all now calculate this part? Okay, then we will be doing this one. Look at this question, look at the questions that you have and write the amount increased or decreased. If it is increased, just write normally, and if it is decreased, give a bracket sign so that you understand that it decreased. Okay, asset and liabilities, all these 1, 2, 3, 4, not the cash. Apart from the cash, other 4, write the amount by how much it increased and how much it decreased. Okay, no, write the amount, write the amount. Don't do the calculation by brain, do it by calculator.
13,000 decreased by 13,000.
Each amount for account receivable, inventory, account payable and accrued liabilities.
Account receivable.
Is done? Look at the question, it's with you. You don't have to look at the black whiteboard, it's here.
Very talented. Accrued liabilities decreased by.
Start from accounts receivable.
This is one.
All done? On the back? So what we did, the first I tried to identify the amount of profit and then any non-cash item, and then if there is any gain or sale, there is no gain or sale here, no gain or loss here. And the third, go to the balance sheet, look at the current asset and current liability section. Don't worry for the cash, ignore that. And other items I need to find whether it increased or decreased. Is that okay? Now, any question with this? Okay, so we start with the profit. Write first net profit $51,000. Okay, we write net profit is $51,000. Net profit is $51,000. So indirect method will always start with net profit. We can remember, right? Indirect method always start with net profit plus the first item is going to be depreciation. That is my non-cash item. Depreciation. How much is the depreciation?
26.
It is $26,000. Anyone has any idea why I am adding back depreciation?
Because it is already
It was deducted to calculate the net profit. So because my calculation is for cash flow, so I want to go back and deduct all the items. So I want to go back. Actually, if I do a cash basis accounting, probably my net profit is going to be $51,000 plus $26,000. That's why I'm adding back. Okay. When I got the net profit, I actually deducted depreciation from my revenue, but now I am just adding back again. Okay. This is one. Now no gain or loss, so I'll be moving to current asset. Go one item by item. Let's go. First one is accounts receivable. Okay. It increased or decreased? Account receivable?
Yes.
Decreased, right?
Yes.
So what was my last class formula? If asset decreasing, cash will be? Cash will be?
Cash improve.
If asset is increasing. Remember asset. Cash will be always decreasing. Okay. If any other asset is increasing, the cash asset, cash itself is an asset, will always be decreasing, right? If liability is increasing, cash will be? If liabilities is increasing, cash is also going to be increasing. Very good. If liability is decreasing, it has to be opposite. Asset decreasing, cash increasing. Okay. Now account receivable is decreased. By how much? So we always take the difference, right? Don't take the net amount or the raw amount. We always take the difference by how much it decreased. So it decreased by $18,000. Is that correct?
Yes.
Okay. We go to the next item. Inventory. So I can write decrease and increase in inventory. What is the amount? It increased by 4,000, so I have to deduct. Cash is decreasing. Let's go to the liability then. I don't have any other asset. So accounts payable. It increased or decreased? It actually increased. So increase in accounts payable. It increased by $13,000. Okay. Accrued liabilities also decreased. What is the amount? It is 13,000. So there is going to be minus. Anything else? Can you draw now? Try this. What is the amount? It's going to be $91,000. Is that okay? It's going to be? Have you got $91,000? It's good? Okay. So this is cash flow from operating activities, right? So with this, we'll continue with the cash flow from other activities as well. Cash flow from investing. Let's do now. Any problem with this indirect method? Anyone has any problem? The first is to identify the depreciation. The second step is to identify the non-cash item from the income statement, if there is any gain or loss that we have to find out. And the third is to go to the balance sheet, look at only the current asset and current liabilities, and then we identify whether it increased or decreased. Okay. And now we will do the second part, that is cash flow from investing activities. What do we have? What is the information is saying? Acquisition of non-current is $118,000. Of this amount, $100,000 is paid in cash and $18,000 by signing a bill payable. Look at this. Look at this. We bought the asset by $118,000 and we paid cash $100,000. Okay. So how much I am going to write here? 100,000 or 118? $100,000, right? Cash payment for acquisition of asset. Is that okay in the back? So this is cash outflow or cash inflow? Cash outflow. Go to the next one. Cash receipt from sale of land is $28,000. So it also should be reported in which section? Investing or financing? Investing. Okay, so I write sale of land, cash inflow or outflow, $28,000. What is the net of cash flow from investing activities? Is going to be 72,000. Cash outflow, don't forget to write outflow, I mean give the bracket. Now I do the cash flow from financing activities. Okay, cash flow from financing activities, I have what? Cash receipt from ordinary shares is $29,000. Is cash inflow or cash outflow? Okay, issue of shares, its amount is $29,000, that is cash inflow. And then they write payment of bill payable, that is $18,000, also cash flow from financing activities. So I'm writing minus $18,000. And then payment of dividend $8,000, again I'm writing minus $8,000. Is that okay? Payment of dividend and payment of bill payable is also in the part of cash flow from financing activities, and it is cash outflow. What is the net balance in cash flow from financing activities? $2,000? $3,000. Is that okay? Anyone has any problem with this? So if you add now this one, what is the balance here? Add this 91,000 and then minus 72, and then whatever the balance here, 3,000, right? Add that one and give me the balance. How much? 22,000. Have you got everyone? Yes. What is the beginning balance of cash? 8,000? Is that correct? So add the cash balance of beginning. Add beginning cash balance with this $22,000. Then what is the ending cash balance that you find? 30,000. So the balance sheet is also showing ending cash balance is $30,000. Is that okay? So this is how you will know automatically that your answer is correct. Cash balance? Yes. How do you get it? This is look at the balance sheet. Current asset, cash. Beginning balance is $8,000, right? So beginning balance plus whatever change happened during the year, then you get the ending balance. Matching, yes. Any question with this? So much discussion. 22,000 is 91,000 minus 72,000 plus 3,000. So that is how much? How much you got? 22,000, right? And then add the beginning cash balance, $8,000. So that is giving you ending cash balance, $30,000. So this is what they reported, $30,000. So if it's not coming $30,000 in your calculation, that means you have done something wrong.
So ending balance, ending
Cash balance,
balance is
$30,000. That should match with your balance sheet ending cash balance.
plus 8,000.
22 plus 8, that's all.
Yeah, plus
So that you get 30, right?
total balance will be this.
Yeah,
plus
so 30.
Opening cash balance.
Yeah, 8,000. So if you add this, it's going to be 30, and that should match with your balance. Any question with this? Yes. I don't listen the question. Yes. Yes. We need to show in the Yeah, in the cash flow statement, the way that I wrote.
The one that you mentioned for the cash balance that we received for the cash flow. And
Yeah.
Adding up the opening cash balance.
Mm.
You need to show that. On the
Yeah. So basically, after doing all this, you will have a net cash flow $22,000, right? At the beginning balance, that should give you the ending balance, right? $30,000, and that should match with whatever they reported in the cash balance for this year.
Do you have to show the calculation as well?
Yeah, we have to show the calculation, of course. Okay. Okay, let's go to the any question with this indirect method. I think not that difficult. It's started with the net profit, depreciation, any gain or loss. If it is loss, we will be adding. If it is gain, we will be deducting. Okay, that's the only simple things. Yes. Which method is? In Australia, this direct method. Yeah, they will show you the cash flow from in the notes section. They again disclose the cash flow statement by using the indirect method. Okay, but in the main statement they have to report using the direct method. Okay, according to ASB, it's direct method. Okay. $16.5. Okay, one more question for this, for cash flow by using indirect method. Okay, let's do this one. Cash flow by using indirect method. I hope that is going to be last calculation for today. It's 2 months we did. Can we start? No discussion. Do it first and then we discuss. This is by using the indirect method. The one that we did right now, yes. Look at the whole question and then identify, right? First, you need to find out the net profit. Second, look at where the depreciation is located. And the third, look at the gain or sale is located. Gain on sale or loss on sale, something. And then look at the balance sheet, current asset, current liabilities, identify increase or decrease. Use these 4 steps, you will be able to do. No, it's here. It's only here. Yep. Oh. What happened? You wanna go? Good luck. Yeah, give attendance, right? Yeah. Can you all fill this one and give it to the next, maybe? Or give him first. Can you, sign it and give it to the others. Use the net profit. Have you found net profit?
Yes.
Depreciation? Gain or loss? Very good. So that is your first job. And then we work on current asset and current liability. Yes, if it is gain, we deduct. If it is loss, we add.
Gain is we deduct, yes sir?
Yeah, gain is we deduct. And then go to the balance sheet, current asset, identify increase, decrease, and then amount.
90,000. Average on account receivable. Decrease, increase. Cash is increase, right? यो पाउन्डको फेरि कस्तो कबाडी छ
What happened? You do. You are also listening.
69 सबै अकाउन्ट रिसिभेबल अनि
Okay, we'll do it later, but decrease right now. I'll explain later. Gain. Yes. Okay, you got it? Why we are deducting?
No, he didn't get.
You didn't get. Oh, you didn't get, right?
Because cash is coming in. Gain means
No, in gain, not always that cash. Cash is not relevant with gain actually. Okay, listen carefully. Gain, in which side we report it, income statement? Revenue side or expense side? Gain is revenue, right? So, but that's not my real revenue. For example, based on cash thing. Okay, so I already added him to record my profit. But this is not, actually he is not cash revenue that I'm looking for. So that's why I need to deduct him to get the cash one.
okay, so it's already there on the profit.
It's already included in the profit. That's why I need to deduct him to get the real profit in cash. In cash. Just like depreciation, the other side we write and we deduct, but that should not deduct. So that's why I add back. Anyone? Cash flow from operating activities?
Sir,
Any balance that you can give me?
4700 minus 7000 and the acquisition of land for long-term lease payable will be plus minus lease payable 4800 100
What is the total amount? Give me the total amount.
is that minus that. Is that so?
What is that minus that?
Lease payable. 122 minus
Anyone? Cash flow from operating activities using the indirect method. What is the balance? 80? 83,300, not exactly, but close. 86, 700. Anyone else got the same? 86, 700. Okay, we start with this profit, right? My first item is profit. What is the next thing I told? To add what? Depreciation. Net profit plus depreciation. So I find depreciation to add this one. Is that okay? Second is to find gain or loss. So I have a gain already on sale of building $5,500. If it is gain, I am giving him minus. Eh? Why minus this one? I already explained once. Anyway, anyone can explain why we are deducting this one from profit? Okay. When I am calculating this profit, I had one, let's say, listen carefully, sales revenue, right? For example, sales revenue was there, and then add any other revenue, then deduct any other expense, then finally we reach that profit, $70,500. But this gain or loss actually not related with cash exactly. But when I was calculating profit, I added him already in my profit. So he should not be included in my profit in the cash term. That is the reason. In the cash term. So I need to deduct him using the cash term, right? But if it is normal depreciation, of course we deduct to get the net profit. So that's why we add back again depreciation so that we can find the net profit in terms of cash, not in terms of the normal revenue accounting that we do. So cash gain on sale of building is going to be deducted from my profit here. Current liability section, and I can find cash and cash equivalent is not my concern at this moment. Account receivable, it's increased or decreased? Account receivable is decreased, but what is the amount? $4,700. So it decreased, that means I will be adding that. Inventories is also increased by $7,000, so I will be deducting that amount, accounts payable increased from 56,000 to 57,000, that means $2,700. So I will be adding that one, and this one decreased 17,000 to 14,000.
1700. Accounts payable.
Oh, this is 1700. Okay, 1700. And the second one?
2700.
2700.
867.
Deduct, right? Yeah. So now do this calculation.
86700.
86700. Very good. So this is one part. The second part, what I said, investing and financing, it will be same even if you do direct or indirect method, doesn't matter. What we need to do, we need to read this information and classify which belongs to investing and which belongs to financing. Can you go quickly with this? Issue of ordinary share for cash. Financing or investing? Financing. And it's going to be cash inflow, right? So you give a cash inflow. Okay. Depreciation expense already did. Purchase of equipment $75,000. So it's going to be what? Investing. And it's going to be minus. Acquisition of land by issuing long-term bill payable.
Acquisition of land minus.
Is what? Is non-cash item. So I'm not going to. Cost of building the sold is 53,000. Cost of building sold is $53,000. Is related to it? Investing. But we need to find out the amount. This is the cost value. But I don't know what is the actual amount that I sold. So we have gain on this one is how much? $5,500, right?
Yeah.
So basically this is the cost value, and I made a profit on this building is 5,500. So it's going to be 53,000 plus 5,500.
That's the cost. Like how we gonna write?
Sale of building. Sale of building. So this is related with what? Investing, and it's going to be plus. This one? Okay. The building that I'm selling, for example, its carrying amount is $53,000. So probably I might sell it more than 53,000 or less than 53,000. This purpose is to find out exact cash amount that I sold. But then they say that gain on this building is $5,500. That means the selling price of this building is 53,000 plus $5,500 that I got cash. Is that okay?
So we can sell a building.
53 plus 5,500. Yes. What else? Payment of bill payable. Anyone remember? Is going to be financing. Very good. And it's going to be negative. Payment of cash dividend. Issue of bill payable to borrow cash. Finance is going to be plus. Gain on sale already done. Profit already done. Can you give me the answer for investing first? Investing is going to be 58,500 plus, and I see there is another 75,000 negative value. What is the amount? $16,500. Have you got everyone? $500.
Decreasing. Oh yeah.
In the middle? Guys are okay? Doing? This one, I have a purchase of equipment negative 75, and I have sale of building 53 plus 5,500, that is $58,500. So there must be a negative balance of $16,500. Now let's do the financing quickly. Financing, anyone? Financing is going to be 4,900. Very good. Anyone else?
Yeah, 4,900.
Same on the back. Just want to make sure that on the back. Financing.
4,900.
This one, acquisition of land. this one, issue of bill payable to borrow cash. Basically a notes payable. For example, you gave a note someone, you borrowed money. Cash is coming. Notes payable means, or bills payable means you have to return this money with interest. Okay? So we are issuing a bill. You can think about a bond. What is the concept of bond? We are issuing the bond. Basically we receive the money, and then after some times we will be paying them the bond plus interest. So bill payable, you can think of a kind of bond that we are issuing to get the cash. Any question with this? What is the amount? 4900. Can you give me the total balance now based on these three? Operating, investing and financing. 75,000? 100 or 500? 75,000? 100. Yeah, not 75,500. It should be 75,100. Can you add now the beginning balance of cash? That is 17,000. What is the total amount? Ending balance is going to be? So that is my answer, $92,100. Any question? I think I will not be doing today the lecture.
Do the direct method one.
Eh?
Direct method, one more example.
One more example?
From direct.
You want to do one more example? I have still one more example with direct method. So maybe we can finish with that one. Can you turn on the page that I give you? 16.3. Is it 16.3, right? Yeah. You got it? Everyone? You want to finish this one?
Yes, sir.
You have a time, patience. So this is the final one. Okay, so we'll not be doing the lecture today. I can't. Okay. No, I mean, we don't have time anyway. Can you go to the next? Look at the paper that I give you. 16.3. 16.3. The problem number 16.3. Let's do it. Huh? Direct method starts with collection from customers, payment for inventories, payment for supplies. Like the first is collection from customer, and then payment to the supplies, and then we go all the expenses. Look at the questions that you did already. Is that okay? Any problems, any questions with this? Can we move next? Are you ready for the next question? Okay, we do the final